morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, December the 12th. Well, we had an interesting day today. Markets actually gapped up and ran into our pivotal resistance area, and we actually rolled over and sold off, and we flagged into the close. Very interesting developments, and that's basically, if you see the sentiment and the emotions of traders, retail traders. And what happened basically is that as the shorts were covering, they were pushing this market higher and higher, and then people that were short, getting frustrated and letting their emotions get in the way, came in and started buying the market, and again pushing it into a big area of resistance, and then the market actually started to roll over again. And then we picked up we caught a small little bit into the close, and we bear flagged into the close today. So nonetheless, a very interesting development, and it's really interesting to see when the markets actually act this way. It was no surprise that the markets weren't going to break through this area, because it is a big area of resistance. But what happens is once you get that short covering surge, people get frustrated that they're on the wrong side of the market. They start buying, and what happens? They buy into tops. And that's really not the right thing to do, because you let your emotions get in the way. But nonetheless, a good day. Dow up 78, again a big leader. S&P up 9. Gold up fractionally at 30 cents. Dollar down, which I'm going to talk about the dollar tonight. And the Nasdaq up 35. A big day in the Nasdaq. We did have an upgrade in Apple. Apple did bounce about $11, but really nothing great. Still very dangerous stock to trade at these levels. I'd be waiting for Apple to either capitulate to the downside, rally up higher, and then re-enter short. But that's for another day. We'll talk about that. As far as the charts, really nothing much has changed. It looks like a big day, but really what turned out to be a big fade at the end of the day. And that's what we're going to get into. Tomorrow, big FOMC rate decision, guys. And that's going to be really the big topic for tomorrow. And I'm hoping might put at least a direction in this market. Now, again, I'm looking for a little bit of a pullback. I'm still looking for some further weakness, and then we could buy into, and we can catch that year-end rally. Now, usually the Santa Claus rally doesn't come into play right until somewhere around the 15th, 16th, 17th of December, as when all of the fund managers, everybody starts to wind down, we get lower volume, and what happens? The markets just drift higher, and people start repositioning themselves, and the market just kind of drifts higher, where shorts try to short, and then the market just won't have that. And that's what happens every year, or at least almost every year. So big FOMC rate decision, which also, to me, I'm going to be watching closely, is gold. If they further accommodate, which I'm sure they will, for whatever reason, or how they're going to do it, or they're going to extend the Operation Twist, or QE3 is going to be extended as well. With that, I think gold is going to catch a big bid, and gold has been pulling back on low volume, and it was a little early in the gold trade. The reason why was the market ended up selling off at that one particular time, and then everybody took gold acted as a risk asset and just took everything off the table. But gold is acting real good, so not for tomorrow. We don't want to trade gold tomorrow. We want to look how it acts and how it closes, and then we probably get a good trade into Thursday or Friday, or at least into next week. All right, so we have the FOMC numbers here, and I just want to show you briefly. Now, here's the dollar chart, right? Here's the DX, the dollar future index future chart. Here's my scenario, my play. We have our low here at 79.55, and we have this big capitulatory spike up here, which comes in around 80.99. And we're sitting on a 61.8% retracement, which usually is a good sign for a bounce. If not, it would be that 79.84, which would be the 78% retracement. I think in this area, we also got a Ikabuchi cloud here, which is actually sitting on this coin. And I don't use it quite often. I use it more with Forex, but I will tell you this acts really well. This is a 4-hour chart here. So my guess would be maybe a little push lower tomorrow. We have the late crowd, the late retail crowd coming in and buying this market up. One more push up, fail at the highs. I think the dollar pops up. And I don't mean a great big rally, but something maybe to test these highs up in here, or maybe even here, and then we fail, which would put a bid into equities and then rally into the end of the year. And then I would see further weakness in the dollar going into the end of the year, and then, of course, we would reevaluate it in 2013. Take a look at our 10-minute chart of the SPY just to show you what happened. Gap up, run, consolidate into lunch, and then fail. And then we fall right back in. We ended up right back where we started. A little bit of a bear flag here into the close. So that's not what I'd like to see. Although the Dow was up 78, Dow was up at one point well over 100 points, 116, 117 points or so. Then we failed this with drop, so it really wasn't attainable. So this is something that we will continue to monitor. Now, if you look at the spider chart, we did break that slanted neckline, right? Now we do have this little area here of resistance which still broke down. You see what happened? We broke above it and then we failed, and we closed below this neckline of 143.79, 143.80, call it. Nice volume. We are overboard here. Our stochastics, MACDs are starting to curl up again, as you can see. We're making higher highs on our histograms. So real nice bullish chart. But I will say that consolidation and then 4 or 5 days up, you really need to consider, say, do you really want to be buying up here? And I think that there will be one sell-off, not a consolidation, but one sell-off. Now, me personally, I would need to see another 2 or 3 days before I really buy into this rally. And again, it's only 1 day, a big push up. Remember I mentioned yesterday morning, the S&P 30-minute cash. Watch for a big move somewhere. We don't know which way. Risk probably to the upside, and sure enough, we got that big engulfing candle, and then we sold back off again. But still, I mean, rather constructive. If you look at the bullish case, and then we'll see what happens going from here. But this 30-minute Bollinger Band really gives you an idea. Hey, a move is coming. If you are long, maybe hedge. If you're short, maybe hedge. But this is a nice little indicator on the 30-minute chart. And we have our spider 30-minute inverted head and shoulders. As you can see here, we broke it back above this area here of consolidation. We back tested it. Good sign. We made a higher low from the previous day. Outside day, again, very bullish, but we still need to have the market prove itself. Tomorrow will be a telling day. Now, tomorrow might be skewed, and I will tell you because of the FOMC, what happens is that the market closes up. Whatever the market does with the FOMC usually reverts itself the next day. So, and then we have options expiration coming next week, but that's another story. But this is a very tricky week, so please be aware of that, okay? Now, transports did well, rather well. A lot of these smaller truckers and some of the rails did well. Again, I don't trade the sector, but I follow it very closely. We are overboard here in our stochastics, again with our MACDs, but they're looking great. And we just closed above this trend line that's been for months and months on end. So let's see if this has a little bit of follow through. We do have an indecision candle here, a little spinning top, doji if you will. So tomorrow is going to validate this move. If we close below it, it's going to tell us that we're headed back lower, at least to the 200-day. If we close back above it, then we have a possible breakout on our hand. So that's something that we're going to watch. Take a look at our diamonds. As you can see here, strength in a Dow. I don't want to see that. That's not what I want to see. I want to see strength in a Russell, which we did have. I want to see strength in a NASDAQ, which we do not have. And I want to see other sectors that are following. But again, constructive. This bearish rising wedge obviously is not playing out. So this wedge is just going to be a failed bearish setup. And now we're back above the upper end of the wedge. So we'll see what happens. And here, our IWMs. Big gap up, risk on. I like it. I like the fact that we are up in these areas. I like the fact that we broke above this horizontal neckline, slanted neckline, and we closed right above it and back above this lower trend line support, which is a long-term trend line support. So very, very bullish. And if you notice, if you did follow me, if the guys and gals that are out in front of the screens all day, you'll see a lot of small caps are running. So that tells me that we have a pickup in volatility, small caps are running. We're probably getting to the real end of the move here. So let's just see what happens. Maybe another push up today, and then we rally, and then we sell off. Apple, 2 more charts, guys, and I'll let you go. Again, very simple today. Apple tried to break higher, fell back into the gap area of support. Again, not looking to, I mean, if Apple sold off from the high 700s and rallies 10, 8, 9 points, that's not enough for me to say that we have something really big on our hands. We do have a higher low from the low, right? So we do have a 505 low, and we have here at 518. It needs to hold this area. So even if we consolidate here for 2 or 3 more days, even the rest of the week, and we take a beeline shot up to the 600, 620 area, Anybody who's long, I would recommend exiting longs anywhere from the 615 to 620 area. Reevaluate and see where this goes. If it consolidates at the upper end of the range, it's probably going to take a shot higher, maybe recover. However, if it stays below that 620-ish and this lower trend line, this long-term trend line, it's probably going to break lower again, and that's where we would need to really reevaluate it. At this area, I'd be looking for a short trade. Up in here, if I'm long, I'm not going to be short or long in this area, but I am going to watch I'm going to have a protective stop below this 505 area, because a break below 505 and close, you're probably going to have a beeline to break 500. Okay, so just please keep that in mind for those of you who are trading Apple. Last is going to be Google. Qs, as you can see here, broke above the 50, and again, that's a little bit of strength in technology as well as Apple. So I don't like trading the Qs, and only because the Qs is very skewed because of Apple. And sometimes it's a good indicator, and sometimes it just doesn't really work that well. But again, just want to show you what technology is doing. And one big cap tech, big move, break above the 200-day moving average. Now, seasonal, so we're into seasonal strength here. So a nice pullback would be back into this area. I'd be looking to buy, start nibbling in here. So that's what I'm hoping for, a pullback. We get a pullback, a strength in the dollar, maybe a pullback, maybe something happens with the FOMC that they don't like, the market likes, or they sell the news. Fiscal cliff is being resolved. They're rallying based that the fiscal cliff is going to be resolved, as you can see. That being said, they probably will sell the news. And if they do, we should get a nice little sell-off that we can buy into the last 2 weeks of the year. Keep that in mind. Have a great night. Have a great day, everybody trading, and we'll talk to you tomorrow. Take care.